All right. What's up, everybody? How we doing today? Check, check. Real quick, if you guys can hear me, and if my fan isn't annoying, let me know. Can you guys hear me? Is the fan good? This room's hot, so I need the fan on. Can you hear the fan, or is it okay? Cool. All right, everybody here. Check, check. What's up, everybody? All right, we'll keep the fan on. If the fan's annoying, just let me know. Appreciate everyone popping on. This is a live class on leaps. Yeah, my goal is to just, if you're new to leaps, if you're experienced, just kind of walk you through how leaps changed my life and how I use it as a system today. You know, a 3-step leap system. I'm going to bring you back to the beginning because that's where I started to fine tune this. And you've seen the results recently. Obviously, the leap challenge has created a lot of successes for everybody on YouTube. Taking the trades, watching the challenge, and even myself, I think pushed up my account like 6 figures in a month between leaps and two small day trades. What's up, everybody in the chat? Comment leaps if you guys are ready to go. If you're pumped up, let's get started. So hit me up with leaps in the chat. What's up, Norman? What's up, Al? What's up, Kevin? What's up, Danny? What's up, Dressy? Jamie? Hello, everybody in the chat. All right, here we go. Let's get it. What's up, Greg? Spyro? Nick? Oh, Nick. Nick's been with us for like 4 years. I remember that name. What's up, Nick? Brandon, Dinesh, Mark, Biggs, Sap. What's up, my Leap fam? All right, so let me break down the beginning of the Leap system. You know, why did this become something I focused on? You know, why did you started to use Leaps, and why did I feel like it was needed? So I'll walk you back to that day. Basically, in 2022, I had come off my best year ever option selling, had a 6-figure month, or 6-figure 3 months selling puts. It's the same type of market right now. Crypto was hot, put selling was awesome, and just cranked. I cranked my account, had a year that I was proud of, and just kept growing it. And then I took all of my money. I kid you, I took all my money, and I thought it was a better decision to put it in a house. So I was building this dream house in 2022, and all of my money was tied up in this house. And I was like, it's okay. I'll save money. I don't have to use the bank's money. And this will be better than having it in the markets because the uncertainty, who knows? But what happened was the house took years and years and years to build, way longer than I thought. And every month in the last, let's say the last 6 months of the build, we were going over budget by like $30,000 a month. So I basically was drowning in bills, and I felt like I was like financially just dead. It was the worst feeling ever. I just was so close to the dream, you know, the dream of that house you wanted. And at the end of the build, I only had like 6 figures left that they gave me once I got to move into the house. So I'm stuck with like minimal trading capital relative to the past, relative to also the bills I had. And I could have just done CSPs, and it would have took me years and years and years to pay off the debt and the extra bills of the house. And on top of that, things weren't fixed, they weren't done, so I needed to keep putting money into this new house. And I had two choices, just like slowly pay this off, maybe over 10 years, or go faster. And at that point, it was like leaps. Do leaps. It's the balance of safety and risk. And so that was when I had to push myself. I had to push myself to figure out how to make money quickly, fast, and aggressively. And that's when I defined this leap system. The one I teach on YouTube, the one you guys saw, the whole challenge developed from. And as you know, like a lot of students have had their best months ever with us. Like the leap challenge was free on YouTube for 90 days at this point. We're at the end of it. One student hit $700,000. He messages me. He says, Matt, Amazon, I am in $500,000 of Amazon contracts. And I knew Amazon was the best play of the whole challenge. So he's up, as you can see, like 500K from mostly that play. So this is not something that is like a one-off. Years after I went through that struggle, I got into leaps, I just kept refining the system. And it's what I give you guys for free. It's what I give the students inside the leap coaching. And this is the system now that is just even getting better. So my goal today is to tell you everything I know that has morphed into the leap system at this point. Everything you need to know to hopefully develop some of your leaps and figure out how to play with more aggression, safely, without gambling, right? That's the goal. So one student I want to run through as well. One of my favorite students, just on a call with me like 20 minutes ago with our group call. Isaac has grown 150K to 1.8 million. And Isaac is the definition of what I want everybody in the world to do if they want to make money in the markets. So his whole path, his whole transition, everything he's learned, if I had to give you guys a mission, it's just do what Isaac did, copy Isaac. And I'll tell you how you can have $1 million year and replicate possibly Isaac's success. And here's what it comes down to. Number one, people here are new to the markets. They're frustrated. Everything they're learning feels like it's not working. They can't put together the right indicators. They're trying to day trade and they're in the frustration mode. Like you're just like, why can't I do this? Other people are, why can't I? Different Isaac. So if you're in the frustration mode, here's the next thing you need to do is build consistency. So I always say this, like, lay the bricks, everybody, lay the bricks. You cannot put walls up until you have foundation. And foundation is really just winning. How can you win and not have your account go backwards completely? Because every time you go backwards and reset, it wrecks you. So very important to win without going backwards. And you're probably wondering, how do I win without going backwards, Matt? And this is the consistency we worked with Isaac for like 8 months to do. Just sell puts, selling puts. It's as easy as that. And I've coached put selling for 2 years, and I've collected all of our trades from put selling with the students, and we've hit 5 losing trades. But you don't lose when you sell puts. You just get assigned. So it's not like you're blowing up your account. It's not like you could ever go backwards completely put selling. So the yellow means we got assigned, right? In looking back, oh man, I got assigned. Like this is probably the worst decision ever. Like Nug today is at like $120. So you would have like tripled your money just by holding. So getting assigned sometimes is a gift. This assignment would have sucked though. But a lot of the assignments are at some stupid levels. Like we did get assigned TNA at 50. It's around 50 now. But the point is, this is 97 winners and 5 losers, right? For put selling. Yeah, sorry, 120 trades, 4 losers. I'm just telling you guys this because if you want to start selling puts. That's what we kind of helped Isaac do. And he was at 130K at the baseline, let's say. And even put selling got him up to 500K. His account tripled. And even doing puts aggressively, it's possible to do something like that. And so the big switch is going from selling puts to finding the next level. So what is that? If you're making money consistently, how do you scale it up? And it's exactly what I had to ask myself years ago when I had to pay the bills from the house. And I had minimal trading capital compared to what I should have had given the equity in the house I put in. But like if you have to put the gas down, the best route is leap options, because the market's good. The market's always been good. And you're going to have a hard time losing if you just pick the right things. So leaps pushed 500K for Isaac to 1.8 million, right? 500K to 1.8. I think he crossed 2 million last month as well. I just don't have the screenshot. So that is a much faster growth, right? There's higher risk, but like I said, there's no point in jumping to leaps completely until you're put selling and making some consistency. All right, you don't build a house, put up the walls with no foundation. You have to have some type of foundation. You got to win, right? You just have to win. Because if you train yourself to build, and give it all up, there's something wrong. There's something inherently wrong with that system and that approach. And if you can't fix the big rocks that are holding you back, leaps aren't going to do anything for you long term. It's just a sexy path that won't change your life. But I want to teach you guys how to do it right though. But again, try to start selling some type of options, whether they're credit spreads, iron condors, CSPs, but then integrate this leap system I'm going to teach you here. Because leaps at the end of the day are the best path. They're the best path over day trading because you don't have to watch the markets, over real estate because you don't have to fix a toilet, and they're better than long-term investing because it's just multiplied returns. So if long-term investing is 7% a year, leap options are just leveraging that. So you're beating even the boring 7%. So I love leaps because of that. And we think of leaps like this, right? You guys have to understand the truth about leaps. You're only leveraging the market returns. And the market, on average, returns 7% a year. So stocks are boats. You have a river, which is the market. Some years, the river's flowing fast. There's a 20% return for the markets. Some years it's a slow river. It's a 7% return. Some years it's a dry river. There's no return. Who knows? I haven't been in that market in a long time. But what I'm telling you is the river is just pushing all the boats. So you don't have to do much to make some type of return. And all a leap option is just the motor you're adding to the boat. So if Apple is a boat and it makes 12% this year, you put a motor on Apple, it's making 30% for a leap, maybe 100, maybe 200. Who knows? You never know because the river could be flowing faster. In the motor, you might put a dual motor on, right? Like some stocks, they might move twice as fast as others. For example, if you got in anything that makes chips, NVIDIA, not talking potato chips, I'm talking like AI chips, NVIDIA, AMD, we'll call that dual motor. You might get lucky. Sometimes you hit the dual motor stocks. I would say that's the stocks that Isaac hit, because going from 500K to 2 million, that's something special, right? So you're in the boat. It's moving fast. Sometimes you get lucky. You got multiple motors, and that's a heck of a year. So we're taking that bet. We're taking that all day. Why do we take this bet? Why do we take a bet with a leap? It's because you can always make way more than you could lose. Everyone's always asking me, Matt, what do you do in a recession? Matt, what do you do if the market pulls back? And I don't know. Like, I'm not worried about that. Like, we're trying to make more than we would ever lose. Because if I do lose, I just, swing again. Take another shot. Because it's always worth swinging. Because if you're in a good market, you're just leveraging that move. And couple of the plays I've given this year on YouTube have surpassed 200, 300%. So how many losers do you pay for? I don't have any. I have 0 leap options I've ever bought this year that have lost all of the money, right? So you're never losing your full account. You're never losing the full trade. So let's say the worst is 60% down, right? You're losing 60%. And that's a bad month. It sucked. You wake up, you buy leaps again next month, you hit a 200% win. Maybe Baba hits. You're paying for another 60% down month if it happens, which I don't see many leaps really suffering and staying down. Staying down is the key. You might suffer for a week or a month, but staying down this much is tough. But again, how many 60% winners can you cover with Baba? This is 240%, and now we're looking at 300%, right? So think about that. One trade, you hit it, it pays for 6 losing trades. And that would be rare for you ever to hit 6 months of the market tanking, of the leaps falling apart. So you're always wanting to take that bet. There's ways to understand if the markets are going to fall. It's not rocket science, but for the most part, you're not trying to focus on the 1%. You're trying to focus on the 99% of the time. So if you can pay for 6 bad possible trades, why not? That's why I love this system. Because if you just get over the fear of, I'm going to have a bad trade, then you can realize it's a risk to reward game that's worth playing. Hopefully it makes sense. So here's exactly how I would buy leaps, just so you guys know. And then we're going to talk about the actual frameworks we're going to put together. So if you guys are pumped, if this is something exciting, just give me a yes in the chat. Because it's been 5-10 minutes since I've seen a comment, and I want to make sure my computer's not broken. Yeehaw! Albatross. We got one person. Anybody? Justin. Mike. Denise. What up? All right, let's get it. All right, everybody, love it. So here's my secret. Everybody tells you to buy in the money. Don't do that. Don't do it. Matt doesn't go in the money. People who buy in the money are scared. They have no conviction. If you really are confident and you've done your due diligence, you go out of the money. So don't be a sissy. We want to be buying out of the money just slightly, 10, 20%. And then we're going 300 days out, 365. Because anytime you chop that down, you make it really tough to make money. You are buying the time. You're buying the time to wait. If you have no time, sometimes it takes one pullback, and those short-term options, they're toast. They're down. That's where you lose the full amount. You're not coming back from that trade. I'm not trying to get into trades that would go more than 60% down, right? A good leap option should go down and come back if you buy it correctly. And so here's the next thing. You wait. Once you buy, you wait. It'll take 2 to 8 weeks to hit a winning trade if you do it correctly. And the longer you're going to wait is based off of how well you're entering your leaps, how defined your system is. So if you want to speed up how fast you make a leap profit, you're buying perfect entries with a technical gauge. You're buying stocks that are decently safe. If they have no value, if they're hypey, it's much harder to make money, right? It doesn't matter how good an entry is if you're buying, let's say, I don't know the latest, GME. Like GME pulled back to the 50 moving average and the RSI was perfectly at 30 and who cares? Like, you need fundamentals and you need an entry that is perfect. At that point, you're going to have a faster path to making money and a higher chance of making money. So if you guys want to struggle, it's just not following what I'm going to say today. I'm going to hopefully save you a lot of effort, a lot of struggle by figuring out the formula, at least a little bit of it. And the last thing we do is scale. We're going to teach you how to scale out today. Once you're out of the leap, you can now buy more. You can now build the account and kind of rip it. What's up, everybody in the chat? Jerry, TJ, Tariq, Jeffer, Matt, Robert. What up? What up? So here's the 3 steps. I'm going to keep it simple today. I have a little bit more complexity with the tools I use personally, the stuff we teach. It's a little bit more fine-tuned, but here's the big picture. Everything you need to know. This is a lot of the stuff I had to refine is the stocks we choose, the entries we look for, and then how we manage the account. That's super key. So first up, I don't want to complicate things. I like betting on stocks that are proven winners. Proven winners mean they're around for a long time. They've been going up for decades or centuries. And more importantly, they're not going anywhere in the future. So the best play, my favorite play, is a discounted value name. You can't beat it. And I know you guys like AI. I know you like NVIDIA. It's tough. It's tough to win with those. And I can show you some other things, but if I look at all these stocks here, every single one of them has given me 100% return this year, maybe more. I think Lowe's 200%, Pepsi 150, Lennar 150, 200, United Healthcare 150, 200. So we want to minimize the chance of losing money. And I try to stay away from the stocks that, have a small chance of rising. And these stocks, again, they've proven track records. Like, everybody wants to bet on the next Pepsi. Like, who's the next big soda stock? No, that's not how you do it. You bet on the leader, the best soda stock. And here's the key, everybody. Once you know the winners, once you know the monopolies, the duopolies in the market, you just wait for the perfect entry. Okay? So let's define, just before we get into that, what's a perfect stock from the actual under the hood type thing. Like, If we look and open up Pepsi, how do we define it's a good stock? Number one, it's making money. And again, I like history. I like 50 years of success, but revenue is the metric for success. If you're making more than last year, good. If you're making 20% more, even better. 30%, that's incredible. Pretty tough to get past that consistently. But we got margins. This is your strength, the strength of the company. The more you can keep at the end of the day, you make money, you keep it. That's the sign of a successful company, right? Like anybody can spend money and lose it, right? It's not that hard. Like you give money to 90% of Americans, it's not going back in their pocket. It's a hole. You give money to them, it disappears. It's going maybe into negative territory, meaning they're not only losing the money, but they're creating debt from it. they're accumulating losses from the money you give them. That's the worst type of company. So real quick, you just go to TradingView, hit the bar here, and you pull up a company. I don't know. Let's look at Mara. Mara mines crypto. This company, and we go here. You look at top line, bottom line, right? Top line's revenue, bottom line's net income. In 2024, they made $130 million. They lost $124 million. How does that make any sense? How do you get money as a company and then lose double? Like not only do you lose the profits, but you lose more than that. Like that is like red flags. Don't mess with companies that are doing that. We're trying to just win, right? We want to have high win rates. We want to have success. So look at companies that can keep a dollar, right? Very important. Margin. Good question for margin, Al. 5%. That's like you're doing okay. You're in a competitive industry. You might be 5th or 6th place. 5%'s okay. 20%, yeah, you know what you're doing. You might be a leader. 30-40%, you are the market. Like you can charge what you want. You can do what you want. Like for example, let's look at Walmart. Walmart margins are 2%, but they are one of the leaders. So Walmart, not great margins. It's just the industry they're in. It's hard to sell cheap stuff and make any money. Let's look at Nvidia. This company is making 56% margins. That is the market, man. Like there's a reason why this company's been on fire, and it's literally just this number here, 56%. They have massive revenue. They're keeping so much money. It's a no-brainer. So if you look at Qualcomm, another chip stock related sector, what's their margins? 25%. That's like half of Nvidia. And then let's go to AMD. Like who's the better chip play? AMD's at 10%. So who are you going to bet on? Bet on the winner that is absolutely dominating. Why bet on third place? Like if you were watching horses race and you saw a horse in third place and it was a mile back from the other horses, why would you ever put your money into third place? Like you're not trying to make this too complicated. Just go with the winners, everybody. And lastly, you want to see increasing numbers, margins increasing or steady, revenue increasing or steady. Easy, right? Why? Because simply inflation should just organically increase revenue. Just the fact that things become more expensive, revenue should automatically go up just because of that. So if you're not increasing more than 5%, 10% top line per year, there's something wrong with your company. So here's the second key piece. You look for the right stock at a discount. And every one of the stocks I've made 100 to 200% on, given on the YouTube channel, I've given some of the private students, they've all been down 30 to 50%. And somehow UNH was down like 80 or 60%. So you're looking at winners that people don't like at this random moment. This has been the easiest strategy I've ever seen. And so I'll give you another example while I got you guys here excited. But Meta is a winner. This is a company that is, look at that, look at this, look at that. That's a straight up chart. Like, that's a winning stock. And it's right now just currently discounted, currently beaten down. But we like that stuff. That's where we start to look to tackle. It's down 22%, right? It's starting to look like a trigger. This is exactly how I gave you guys Amazon on the YouTube channel, where we had 100% overnight from earnings. It was a no-brainer. Amazon was the play of the year, and it still is really attractive, but we are coming into earnings down 10%. That's still, to me, a pretty big discount, right? It's not as dramatic as Meta. It's not even as dramatic as Lowe's, but we buy discounts, and the extent of it, that's something you'll have to define more. There's a lot of reasons to take a 10% discount over a 30, and that comes down to a lot of other things. I can even shed some light on that later. What's up, Tanya? So multi-week, multi-year, multi-month. Think about those as your discount time frames. The bigger the time frame, the bigger the move can be after. So let's look at my other absolute banger of a play, SoFi. The first time I bought SoFi Leaps was at $7 right here, literally at the bottom of this move before it went to 16. And that was based off of charting. It was based off this discount, and it was based off of the consolidation. And then the second time it got discounted 50%, I got chopped up, unfortunately, but we want to buy discounts. The biggest mistake of the year is I didn't rebuy a lot of these discounts. But SoFi, great example of a stock that, let's say, multi-year discount, right? If I'm looking at this stock as a $30 stock, literally every single day it's trading at 10 or 15, it's a discount because it's 50% down, right? So this, if you're charting it and you're looking at that as your target, and it's creating all these reasons why, from the numbers, from the fundamentals, from the chart, once you line up more of that confluence, that's when you have the conviction to just buy and hold. So SoFi, another play from the channel, as you guys can see, just killer. I know people that did buy in this area here, 500% return to 700% return. 500 to 7. And the whole idea of this, how do you pay for losers? That's how. You pay for 10 to 15 losing trades with that. That's mind-blowing. So the discount's the key, right? Multi-year discount. Currently scouting Target. Target is trading 70% down from a 4-year window. I love that stuff. So I don't mind waiting. That's the only problem with getting this early or getting this at this time, is it might be one you got to wait on. But is Target a winner? Does Target have good revenue? Does it have good growth? Like, that's all stuff we're trying to teach you guys how to dial in. So Target has earnings in 7 days. You can see the only thing tough about this stock is flat. Revenue is flat. It's the only thing tough. The margins are pretty similar to Walmart. And then from there, what I like to do is compare Walmart to Target. They're similar stocks, similar sectors. What's the thing that differentiates them? Really, the margins and the PE ratio. So we're paying 10 PE for Target. Walmart, the PE ratio is going to be around 40. So to me, paying 4 times as much for a similar stock in a similar sector, is it worth it? I don't think it's worth 4 times as much. And we can see Walmart, different picture. Revenue's been increasing and great. Margins are steady. So Target, great setup. From everything I'm teaching you here, the discount, and you're looking at the fundamentals and you're mixing them both in. And here's the last step of the system. So you take $100 or $1,000 or $100,000 and you put it in a leap option. After it doubles or after it triples, you take your initial capital out. So take that hand, boom, you take out your initial $100,000 and you get to go put it in another leap. And this is how you organically grow that portfolio on its own. So think about it. You have 100K. Let's say it's all in on one leap, which I wouldn't recommend, but you make 100K. Now you have 200K. And this other 100K goes into another leap. And eventually this will make another 100K. And what you guys don't realize is that these initial positions, you're still holding them. So you're still holding, let's say, Target. You just scaled out your initial profit. You're still holding, let's say, Alibaba. You just took out your initial profit. And you're just using the initial profit to go in the next play. But these are still $100,000 opportunities to keep running. So you might have your initial capital out, but still keep winning. That's the beauty of scaling out and selling half or selling a third of your position, is you have a free ride, as we call it. It can go up forever. And that way, you're organically growing this portfolio from, let's say, a new play, but from the scaled out plays that have already kind of ran, and that they're just kind of cooking, still kind of hanging. Because the real gift is the 12 months till expiration. So the more time you have, the better. The more time you can let the position that is a winner just keep running. You just keep rolling it into the next one, into the next one, into the next one. Ideally, in a good market, that effect is invaluable. Like, that could be the reason why you become a millionaire. You know, it could be the reason how you turn 10K into 100K. But it's patience, right? It is patience. It's not going to move in a day or a week. It might take two weeks or 2 months. So patience is really the key with the systems I do. They're not that sexy, but the patience is required. So at this point, me, Familia, we want to teach you leaps in a more structured way, right? Because if you can do them successfully, we brought in Nisha, bam, 21% in a couple weeks. Structuring them, the right position size, the right entries, the right plays at the right time. And Dim Sum, 24K in leaps within the first 60 days. So it's just about narrowing in your decisions. Because if you can even replicate half of the success of the Leap Challenge, I mean, how great would your portfolio look next year? I mean, let's say you hit half of these winners. I mean, I can't even believe the winners we hit in the challenge. And I got 2 trades that are at break even, slightly down, that I'm still holding. Airbnb and Uber. But how many of those break even trades did we pay for just from one winner? It's crazy. So how can you guys dial this in on your own to just crank these by yourself? And if you want to not crank it by yourself, we have been silently building the Leap coaching. It's been 4 months. We brought in 10 students initially, 20, and now we're doing 30. But we are seeing the results just as similar to the 90-day Leap challenge. So I'm so excited, everybody, to help you guys learn how to maximize the right market at the right time, because that's where it's worth to take the bet. It's worth it to kind of hit the leaps, because 10K could go to 30, and it's worth it because it pays for the losers, and it has upside that is very, very, very attractive. Questions in the chat? Yeah, we'll rip some questions. I'll hang out for like another 20 minutes here. But questions for you guys, was this helpful? Did you guys have some new things come that you might be wanting to use? Did you have some success here figuring out leaps a little bit better? Do you feel like this strategy with leaps is the strategy for you? Is this going to make you more profitable in 2026? Is this a strategy that's evergreen, or is this something you might try once and give up on? At the end of the day, I haven't gave up on this strategy year over year over year. 60 days ago was the Leap Challenge, and it helped me hit 6 figures in a month. Last year was my famous Tesla trade. It was 4 months of live streaming or putting up videos, showing you guys Tesla, helped me have a 6-figure year with just that trade, or multi-6-figure year. And like I said, the first time ever was when I had to move into my house and I was piling up those bills. So is this something you're going to keep using? Is this the strategy for you? Love it, guys. Is this better than what you're currently doing? Honestly, like, is Leaps better than day trading? Is Leaps better than buying index funds? More importantly, ask yourself this. If you have $1 million, is it worth it to put 50K in Leaps? Is it worth it to have a fifth of your portfolio, a tenth? You don't need to be all in. You don't need to hammer out your whole net worth in Leaps. I'm saying, is it worth it just to put a little bit in and see if it could double or triple? Lastly, do you guys think you would ever fail if we could just have you copy everything I did? If I gave you the trades for a full year, you think you'd fail? And if you were able to see why we do things every single week, if you're able to see the exact in and outs of how I pick these and the tools I have, would you fail? Well, the last question is, do you want to figure out how to take advantage of the system, take advantage of working with me? Because this is the path. If you guys are interested, we are going to have Leap coaching. Leap coaching for the first time ever in Market Moves history. It's insane. And I'm so pumped to launch it that we are giving some insane benefits. For the first time, we're calling it Boost Trading Bootcamp. I've been silently building this program for a full 8 to 10 months. And I've been dialing in the leaps aggressively the last 4 with the bootcamp. And if you're wondering if this is for you, you got to figure out if this is your next step to scale up. Is Leaps the next path? Or you want to start trading, who knows, iron condors. You want to start trading crypto leveraged, who knows. So can you increase your returns without adding risk? That's the key. This is the boost. This is why it's called Boost Trading Bootcamp. So I had 30 spots a week ago. I only have 12 left. I'm excited to work with you guys if you're interested. There's people that are serious that are going to hit this link. They're going to join BTB, and they're going to have a great 2026 with us. There's people that want the next level, And I do believe we're going to be the best leap coaching program online. So hit the link here, fill out an application. If you guys got 2 minutes, my team is absolutely stacked for calls and interviews. At this point, you might even book out the full week, and we might not be able to book any more. So if you're ready, you can also text this number. You can text the word boost, and we can just chat with you there. And you're wondering why the bonus is amazing this month. What is the opportunity? What do you get differently? This is incredible. I've created a Notion document. Every step of the program, we're going to refine the videos in the course. You're going to know exactly position sizing, stock selection, entries, management, and then more importantly, how to maximize. The other stuff is just game changing. We don't only have leaps in this program. We are going to teach other strategies that will get added over the next year. So there's bonuses of maybe other systems, other coaching opportunities that you're going to get added with it. I have Daniel as one of my teachers, and he's been with us for years and years and years as a full-time trader. He's in that program already teaching some credit spreads, and that strategy alone could be one of your favorites, maybe more than leaps. The biggest benefit, I would say, is the software. So let me go. I skipped over it, but I'm spending so much time, so much money on the software to help you guys pick leaps. So as you can see here, this is my leap scanner. This is for the students. You basically sort by, I like this column the most. This is my rating column. It rates all my leaps, top to bottom. It tells me the best entry when it triggers. It also checks the fundamentals, the charts, the technicals. This is your go-to for finding leaps within seconds. We're going to refine the software. We're going to get you access to this as a student. And the other major bonus this month is I have option selling. That's the coaching program we were coaching for years. That's included. You're going to get that for free, no extra charge. So if you become a Leap coaching student, you will get an option selling, and that's where you can see the puts we sell. We'll have 8 live streams a week. That's our more consistent path that, like I said earlier, I would teach Isaac that for the first 6 months and then switch him into leaps. But you have the opportunity to kind of blend both together. Those are the 2 big bonuses. On top of that, Daniel, like I said, is going to be teaching daily income opportunities with SPX, NDX for credit spreads. And that's the riskier strategy. That's the one I'm more nervous bringing people in, but it's a great way to hit 10 to 5% in a day if you do it correctly. It's game changing. So I am someone who over delivers, guys. If you're an early student, I'm going to give you the best deal today, the biggest bonuses, and you can promise that. And if you can trade leaps with me for the next year, like I said earlier, do you think you'd be worse off or better off? Just during the 90-day challenge, you guys had a great time, learned a lot, made a lot of money. If you could bet on me to teach you and guide you for the next year, would it be worth it? So I'm going to answer questions. I'm going to hang out, but you guys got, 10 more minutes to fill out an application and check this last step out. I'm seeing like 30 applications come through already. So I appreciate you guys trusting us. We're going to take our time interviewing these last 12 spots. But I'm so pumped to build this up to the program it's meant to be for the next year. The biggest thing I'm most excited about, which you guys don't realize, is that we're in a perfect storm for stupid returns in the market. Like with the fact AI is cutting costs, making the companies more efficient. There's markets being developed. There's just basically so much money being shoved into these stocks. We're at a place where the markets could absolutely capitulate and run for the next 6 months. And then we combine that, the technology aspect, the money flow aspect, with monetary policy. M2 money supply. Money is absolutely soaring. And we're seeing this go to the moon. This is where money has to go somewhere. So if we're printing money, it's going in the markets typically. So you're getting money flow. You're getting AI, like this revolution happening at the same time. I'm telling you, if this happens like it's supposed to, this might be the most incredible 6 to 8 months. Maybe even the next 2 years if we can keep everything stable. So I'm going to hang out with you guys for 15, 20 minutes, hang out with my kids after, take them to dinner, have a good time. Feel free to I'll answer your questions you had in the chat. The cost of the program, good question. Everything I talked about earlier is the bonuses of the program. If you were somebody that had a smaller account, you can always take something out. The cost would go down. If you're somebody that wanted the bare bones, it might be a different price too. So it's going to be you build it. You build it type thing. All right, everyone, you're flying in with these applications. My phone is blowing up. So I have to check the calendar for the students, or for the team. But take your time. If you have time, head to the link. Fill everything out. You might have a chance to book one of the couple spots we have this week to interview. Questions, everybody. There's a bunch of questions earlier. If you want to retype them, that'd be ideal. But level 3 option trader, am I still able to sell covered calls on leaps? Yeah. If you're level 3, you can always sell covered calls on leaps. So go for it. If you want to do that, yeah, I think my system, the way I teach it, does not sell covered calls. It's really harmful if you sell covered calls and you just throw them on all the time. I would only sell covered calls as a means of scaling out, right? So if I'm gonna exit my play, that's when I don't care about maximizing the play, and that's when I'll write covered calls. But if I'm trying to hit 100% return, every minute I'm in a covered call is sacrificing that. So I don't do covered calls. I don't think it's worth it. Spice rating is we have a fundamental rating for our software. Basically, this is the game changer for even put selling. Like, we pretty much just are able to wake up, pick puts to sell, and it's all rated from the Spice rating. So like hymns, meta, there's a lot of plays in here that I would stay away from personally, but some of them I really, really, really like. The Spice rating just helps normalize option selling, and I'm going to basically refine it to normalize leaps. Like, we could see the best leap today is NVO. Like, wouldn't it be nice to have a tool that just tells you the best leap of the week? It's pretty amazing. So the Spice rating is going to be just your normalization number. Can you explain how to use volume when entering a trade? Not something I do, actually. I don't have that as my entry parameter, right? So that's something I don't even monitor. When there's sell-offs in the market, I'll look at volume. Sell-offs are where everything gets wrecked. Let me just text the team how we doing on the Yeah, so if the calendars get booked up, I might have to come on and put myself on again. So yeah, volume, I only look at in sell-offs. Like volume will dictate if the market is at a place you want to hedge or stay in cash. So volume, I just look at the overall markets, or if there's a sell-off, I can kind of dictate a bottom from volume. How do you choose the ideal entry point for CSPs? I should just delete this stream because I'm giving you guys too much of my framework here. But for CSPs, I look at, like I said, discounts, right? I gave you guys a lot of the secrets today. Like if you could probably put a little bit of them together and figure this out, but like discounts are key. 6-month discount, daily discount. I like a discount. When I'm buying, when I'm selling, it's key. And then RSI is a discount measure. So I'm giving you a lot of the secrets today. Discounts are key. And when I'm selling puts, I'm looking for things I like, right? So there might be a discount in HIMS, but HIMS is scary, sketchy. I don't really like HIMS as much as, let's say, Meta. So I pick Meta because it's safer. How do you close? How close do you think we are to the bottom, and what factors would help us develop the bottom? Good question. Bottoms are developed off of technicals, and I like candlestick patterns. So yeah, like you can see all these arrows on the chart. This is like what we use for our system is candlestick analysis too. So I'm big on candlestick analysis. That's more important for leaps, less important for CSPs, right? So like it's like painting a house. You know, CSPs, you can use a big brush, you can kind of just throw it on there. It's not perfect, but if you're painting like figurines, you got to use a fine-tuned brush. You got to be really careful. That's what I look at leaps are. You have to be fine-tuned. You just can't spray and pray with leaps. So the entry parameter for leaps is way more defined, way more important, and that's the key. What else we got? TJ texted boost. I think our team is the text team is done for the day, so they'll check it tomorrow. Yeah. Sorry about that. All right, last couple questions, everybody. How long do we have the software? Oh, that's we got some really amazing perks for this. Yeah, for the software. So I don't know how many super perks are left, but we have some super duper perks available for the software. I didn't even mention everybody, the whole software is going to be turned into an app, and we're going to be selling puts, buying leaps. You're going to be able to do this stuff on your phone. So yeah, as a student, you get the web-based, you get the app, and you're going to be able to do both strategies together. Pretty epic. And I'm very, 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 very pumped on that. It's going to be so fun. Monitor volatility when entering. Volatility, I don't know what that means. I don't monitor volatility. Volatility is pretty consistent long term for certain stocks, so yeah, if anything, you want to enter on down days, so it's probably a higher volatility. So higher volatility spikes, probably better for your entries. Applications will be reviewed over the next day or two, so yeah, just stay patient. We've taken like 10 days to review 500 applications, and it might take another 10 to 12 days to review the next 100 to 200 applications. So what do you think about cats? I like cats. Cats are great. I got a nice cat at home. All right, peace everybody. I gotta take the kids to dinner. Enjoy the night. I'll see you guys next week. We are gonna do another class. Be sure to show up. That's gonna be where we're gonna teach from the teachers and from the 7-figure students. So inside the minds of the 2 7-figure guys. We got many more 7-figure people, but they're going to come on next week and teach and answer questions. So free class with our top students ever in history. That's going to be one you won't want to miss. It's next week. So mark your calendars, hit that stream. That's going to be a really, really fun one, just open Q&A, and you guys can just kind of get to know how they got to where they are. Appreciate everybody.